The U.S. Federal Reserve caused a little bit of market turmoil this past week. We saw stocks sell off fairly sharply after the Fed made their announcement on interest rates. So this week I thought I would talk about how you can make money when there is a sharp correction in the market. Now the saying is the market takes the stairs up and the elevator down. What that means is the market tends to go down a lot quicker, a lot sharper than it goes up. And so one of the things that you can do to profit from a correction or a crash in the market is trade inverse exchange traded funds or volatility ETFs. I don't know if they're called an ETF necessarily, but these are instruments that go up when there is more volatility in the market. And of course, inverse ETFs go up when the market goes down. So some of the favorites that I think many investors and traders like to focus on are TZA, UVXY, SDS, and there's many more inverse ETFs and volatility ETFs. Now, the thing that I would caution is that they're not worth trading most of the time, because most of the time they don't really move all that much, and generally speaking, most of the time the market's moving up. You have to be particularly careful with the leveraged ETFs, because if the market is not going down, these things will not only not be going up, but they'll also have time value decay because they're rebalanced every day to maintain their leverage, their 2-to-1, 3-to-1 leverage that they have. So you have to be very careful to only use those leveraged inverse ETFs for very short-term moves. So when the market has a sharp sell-off, like it did on Wednesday this past week, they're great because they'll go up very quickly, and I'm going to show you some charts in just a moment for that. Now, the other thing that I like to do most of the time, and certainly when the market is weak, is focus on what are called alpha stocks. Alpha stocks are those that are trading on their own story. The market doesn't really care about what is happening with a small biotech company versus the overall market. The overall market could be going down 600%, but if a small biotech firm announced that they have successful results in a clinical trial, that stock could go up 200-300%. So that's what an alpha stock is all about. Now, most stocks, most of the time, are not alpha stocks, but some stocks every day exhibit alpha stock characteristics. And again, I'm going to show you some charts in just a moment. But an alpha stock essentially trades with very abnormal volume. So where the stock normally might trade, a million shares a day, all of a sudden it might trade 100 million shares a day. Dramatically increased volume. And that is really the key thing to look for. What I do every day is I build a list of those very abnormal liquid stocks that are going to move up or down regardless of what the market does. They are trading on their own story. So let's dive into some of those charts. And first, here is a chart of UVXY, which is a leverage version of the VXX. Now, the VXX is based on the volatility of the S&P 500 futures. So if the market is seeing more volatility or expects more volatility, then these ETFs will go up. And again, because the market tends to move down much more sharply than it goes up, the market takes the stairs up, the elevator down. So when there's an expectation for a crash or for a correction, you will see these volatility ETFs drive up very quickly. And in this case, you can see that after the Fed announcement right here at 2 p.m. on Wednesday, it went from $20 to $28 in just a short amount of time, just coming into the next day. So from the Fed announcement until the following morning, you had a 40% jump in an ETF that is really just based on the market. Now let's look at the leveraged inverse triple leveraged ETF for the small cap stock. So this is the Russell 2000 small cap market. IWM is the main ETF for that. But the leverage version, inverse, is TZA. So it will go up 3 times as quickly as the market will go down. So if the market goes down 1%, this should go up about 3%. Now it tends to be a little bit less over a number of days simply because they're always rebalancing this. But for those short moves, the sharp sell-off like we saw on Wednesday when the Fed basically said they weren't going to rate or lower rates as often as the market wanted. Well, that caused this to move very quickly, going from $11.20 up to $13.20. So almost a 20% move in just a couple of hours. And so that's a really dramatic way to trade the sell-off in the market. Now, let's talk about alpha stocks. Here are some stocks that did very, very well last week, despite the fact that the market had a big sell-off on Wednesday and then really didn't do much positive on Thursday and Friday. This is NUKK. It is a stock with a very limited number of shares outstanding. We call that a low float stock. I think it only has like 1.7 million shares available to trade. It had some good news and it caused the stock to go up significantly this past week, moving from around $3 to hitting $70 in just 2 days. That stock couldn't, or the investors in that stock really couldn't care less about what the market was doing. They were buying that stock because it was selling off, or because it had something very significant happening. Despite the market sell-off, it went up very sharply. Here's another one, VNCE. And again, you can see on Wednesday when the Fed caused the market to really drop, you saw the stock trade dramatically abnormal volume, much more than normal, and made a big move to the upside. And that move continued into Thursday and Friday. All right, let's get into this week's market analysis. Every week, I give you my assessment of where the markets are likely to go in the near term. We'll look at the stocks, commodities, currency markets. We're going to jump through them now. Let's jump into the S&P 500. And there you can see that big sell-off on Wednesday. This is a short-term chart, 30-day, 2-hour chart. And you see the big sell-off there at 2 o'clock. And so up until then, we had pretty good optimism building in the market, rising bottoms, and then the sharp sell-off, and that really touched off a little bit of panic. Now, if we look at the 3-year weekly chart, we can get a sense of the long-term picture here, and it is still bullish. Even though we had that sharp sell-off, and you can see it there for the week, we've had other weeks like that, and it didn't really break the upward trend line. And that's the case. We still haven't broken the upward trend line. That's why the sentiment stock score is still very strong, plus 70 on the sentiment score. And anything above 60 is a bullish market. You can go to stockscores.com and check out the scores for any stock you're interested in. And of course, while you're at the website, from the homepage, just make sure you register for my free weekly newsletter. It comes out every Monday, most weeks anyway. And I pick stocks in there. I give you some tips on how to trade. So that's a good thing to take a look at. All right, let's dive back into the charts and we'll go to the NASDAQ 100. QQQ is the symbol. You can see on the daily chart the sharp sell-off, but we are still holding the upward trend line on the daily chart. So although the weakness was quite strong, we haven't broken the bullish market in the NASDAQ. How about the Russell 2000 stocks? A little different there. These stocks are much more interest rate sensitive. And so through the month, they have been moving lower while the other markets have been pretty strong. And in doing so, they've broken the daily upward trend line. Now let's jump to the 3-year weekly chart just to get that long-term view. And there on the 3-year weekly, you can see that we're still okay. We're still holding that upward trend line. So we can still call it a bullish market, but it's certainly underperforming the larger cap stocks. And I think it's a market generally avoided. However, most alpha stocks come from the small cap sector. And so I'm happy to trade those, few stocks every day that are very, very abnormal, but I don't want to trade the market, the small cap market in general. All right, onto the TSX. You can see it too had some pretty substantial weakness there. And if we look at that 3-year weekly chart, we see the upward trend is still intact. Okay, you can draw that trend line. We ran away from the trend line. We're pulling back to it. So we could see another week or two of weakness before we find support on the TSX. Let's take a look at gold and then oil. The market for gold starting to see some weakness. So I'm going to start with the 3-year weekly chart. And there you can see that the upward trend line is still in place. But we are building a little falling top here. And that's a concern because if we break this upward trend line from a falling top, that would be an indication that more weakness is coming. So I think you want to be careful with the gold sector. Now, if you look at the very short-term chart, you can see lots of volatility. That means investors are uncertain. The market's bouncing all over the place. What about oil? Let's take a look at USO. And the oil market has been building this compressing volatility pattern. The trend is generally down, but that compression of volatility is good because it's like a coiled spring. And eventually you're going to get a break up or down from that pattern. And what we want to watch for is what direction the break happens. If it breaks to the upside from that compression, then we should get bullish on oil. For now, it's been really just a dead market for 2 years, not much volatility there, and we need to see it break up or down to give us a prediction for where that trend is likely to go. Let's dive into the US dollar. You can see very strong, of course, with the US keeping interest rates higher for longer. That benefits the US dollar. Bitcoin, a little bit of weakness this past week. You can see there a little bit of a sell-off, but if we go to that 3-year weekly chart, you can see that the trend is still up, but I think there's a good chance we're going to see a little bit of a pullback here. It hasn't broken down yet. I want to wait for the breakdown, but this is something I call a bursting bubble candle. It hit a new high this past week, but closed below its open. And that's often an indication, just like there, that we're going to see some weakness. So I'm going to, still be fairly optimistic until I actually see a breakdown. But watching this short-term chart, you can see there's your trend line, and you're really testing it here. So it's going to be very important to watch Bitcoin early next week to see what direction it goes. All right, final chart we're going to look at is TLT, which is the bond market chart. And you can see the big sell-off coming into the Fed, the market basically pricing in that the Fed is not going to lower rates as quickly and as often as investors had hoped because the US economy is staying fairly strong. And now we see it testing this support, and we could break down and then retest these lows. So the bond market looking a little bearish. Let's dive into my ratings then. Large cap and NASDAQ, short-term neutral. We did have that selling pressure, but still long-term bullish. The small cap stocks bearish in the short term, but holding the long-term upward trend line and should bounce this next week. We'll have to see if that happens. Canadian stocks neutral and long-term bullish. Gold and oil now neutral on both time frames. US dollar bullish on both time frames. Bitcoin neutral short-term, long-term bullish, and bonds bearish short-term and long-term neutral. All right, let's get into the trade of the week. This is an example of one of those alpha stocks, and I look for these every day in our active live service at Stockscores.com. We are out there looking for the alpha stocks, the stocks that can make those really, really big moves. And this past few weeks, there's been many stocks making moves of greater than 100% in a single day, and we find them using some filters to look for that statistically significant abnormal activity. Now, once I see that, I then dive into the chart and look for pattern breaks, typically using my action candle indicator, which again, you can learn more about at Stockscores.com. So let's dive in to the chart of NVNI. And this was one of those stocks that had big moves this past week and did so multiple times. Anywhere you see a pink and yellow dot, that is that action candle indicator. And in this instance, it broke a little downward trend line with an action candle, and there was optimism because we had rising bottoms. The other important thing is the stock was trading abnormal volume, an indication that the stock has alpha. Well, that was at about $6 a share right around mid-afternoon on Friday, and it went basically up 100% over the next hour and a half, and made that really dramatic move. And that's the kind of thing that alpha stocks can do. And even in a bear market, even in a market that's crashing or correcting, you will see these alpha stocks that can make these big moves. They're very liquid, very abnormal, and lots of fun to trade. If you want to learn more about that, go to Stockscores.com. Make sure that you're subscribed to the channel. There's new videos coming up every week, and if you're subscribed, you'll get those notifications that the videos have been uploaded. If you like this video, please click the like button, but most importantly, trade well.